Week started off with a major sell-off in Nvidia, got the ball rolling for bears. Lukasz Tomicki was here a month ago saying to sell it. He's a founder and managing partner at LRT Capital Management. Lukasz, welcome back. Is there still more to sell in AI?
Oh, absolutely. I mean, this is just getting started.
Oh boy.
I can't predict what's going to happen in the next 5-6 days. I think, as one of your previous guests mentioned, it's entirely possible that we have some sell-side analysts come out, defend the sector. We get some slightly better news from some company here and there, and we get a rally back up to, all-time highs or close to that. But the fundamental case hasn't even begun to turn down, and I think there's a lot of froth in the space that will come out over the next 24 months.
And where do you see it? I mean, is it across the board? Broadcom got slammed 9%, 10% by the end of the session. So it has to be a little bit less frothy than it was a month ago.
Certainly. So the way to think about it in order are some of the companies that have been heralding investments in AI. Those are probably the least affected. So things like Apple and Microsoft with Azure demand and Google, those are the least effective, but we're going to see that slow down as well. Then you see the chip providers and semi providers, so the Nvidias, the Broadcoms of the world. And then lastly, it's going to be the suppliers of equipment that goes into manufacturing capacity. And so that's like the second derivative. And as you might know from math, the second derivative tends to be the most volatile when it finally turns. So things like KLC, companies such as Synapse, Cadence Systems, Tokyo Electron, Applied Materials, all the machines that go into fabrication capacity, once we get a sense that AI demand is peaking, sales are peaking, therefore production capacity is going to peak, and therefore the sales for those companies will fall. And I think what's also important to know is that the semiconductor equipment companies used to trade at fairly tame valuations. We're talking 10, 12 times earnings, because it was a recognition that they're very cyclical businesses, very difficult to predict the capital spending cycles. Well, today, KLC trades at 36 times earnings, and the earnings are also at a peak level. So you don't need to see much happen for the stock to go down a lot. A little bit of change in sentiment and a little bit of a slowdown in orders and margins, and you can have a big decline in the share price.
What about the product-facing, consumer-facing rather, companies, and Apple or Microsoft? It seems like if you think that the AI trade is going to sputter out, and that this CapEx is going to basically, some of it's going to go kind of wasted, which is essentially what you're saying, then like the iPhone cycle probably has to be pretty soft, because that thing has a pretty major ripple effect if it is a big success. What do you think about Apple?
Yeah, so again, as I said at the beginning, Apple is probably going to be hurt, but it's likely going to be hurt simply because it's trading at a very high valuation, and the iPhone upgrade cycle is continuing to lengthen. While I love my iPhone and a lot of people love their phones, the incremental innovation from the next generation of phone, it's smaller and smaller, and it's a very easy thing to delay purchasing in a recessionary environment. So I don't see Apple pricing going down, margins going down, but I suspect that volumes will decline at some point. And when you start from a historically high valuation level, that's a recipe for an underperforming stock. But again, Apple has a real business, a good business, just like a Microsoft. Whatever you think about Microsoft's AI ambitions, even if they all fall apart, they still have this thing called Office 360 and Windows and a bunch of other things that they're doing. So, those companies are going to be hurt by a slowdown, but they're some of the least vulnerable.
Okay, that's an interesting point. So there are degradations, right? There's levels of sort of susceptibility. Hey, on the long side, we've talked some of your international picks, Petrobras being one of them. You've had some pretty interesting ones. You got a juicy one for me into the weekend?
Yeah, absolutely. So I think we had a pretty terrible week in the stock market. So I figured it would be a great time to do some dumpster diving, if you will, at the end of the week. And maybe we can find a Rembrandt or two in the dumpster, if you will. And so companies that have share prices and valuations at very, very low levels, which means expectations are very low and people are expecting pretty terrible things to happen. So, for example, Petrobras, which is the major oil producer in Brazil, trades at 4 times earnings. And it's important to remember they have 2 share classes. A shares trade at a discount to their ordinary shares. They get the exact same dividends, and you get it at 4 times earnings. Unless you think the government's going to steal the whole company, then it's hard to go wrong from here. And you know what? Oil prices can actually go up, which they've been going down a lot, but guess what? They can also go up, and you get a nice kicker if that happens, and you're getting paid almost 20% yield just to wait.
And that's a pretty nice little yield to wait. All right, doubling down, looking for Petrobras to turn it up, digging through the garbage, looking for Rembrandts. You better be looking through Thomas Crown's garbage because that's a pretty tough find. Thanks, Lukasz. Have a great weekend.